Now, some of SA's top fund managers are banking on emerging trends like AI and international investments. As per the Financial Mail cover, amidst global geopolitical turmoil, South African fund managers are seizing opportunities in the international AI boom, while others are bullish on offshore equities, particularly semiconductor producers. And joining us to unpack this diverse investment landscape in greater detail is Giulietta Talevi. Thank you so much for your time, Giulietta. Let's actually start off with the ability that investors now have to take more of their money offshore. Of course, that comes on the back of Regulation 28, which is great for diversification and better returns. But did it not skew appetite, maybe for lack of a better word, unfairly away from SA Inc.?
I don't think it's unfair because you've got to consider that asset managers are essentially custodians of the money that you and I would give them to invest on their behalf, and we're all looking for the best returns possible. So I think it's the reasonable thing to do to get that money to chase the best returns possible. And especially when you look at what happened to the JSE All Share Index last year, it was down 6.6% in comparison to the Nasdaq, which was up 38%, and the S&P 500, which was up 18%. So if your fund manager didn't take your money offshore, you'd be really angry, I think, and you'd say, why did you stay in South Africa? You don't have to stay in South Africa. You can take a bigger portion off overseas, and I'm going to take my money elsewhere. So I think that's one of the issues that asset managers must be grappling with.
Yeah, I'm feeling patriotic, Giulietta, so of course I have to fight for my SA Inc., but of course investors need to follow the money. Just actually, as we're talking about offshore, where has fund management money flooded to?
Definitely to the AI theme, and I think to quite a few American shares. And you and I speak about it with our guests on Stockwatch every night. But those were the picks last year. The semiconductor companies, the companies that make the machines that produce the semiconductors. So, you mentioned, I think it's Taiwan Semiconductors. There were a couple of stocks mentioned in the article that one fund, Granite in particular, invested in. So definitely AI, the Magnificent Seven. A bit of luxury, stocks that hold Stellantis isn't a luxury company. It makes vehicles, but Ferrari was one of the clutch of companies that stood out for a couple of people. So I think those were the predominant themes overseas.
Yeah, and it's quite interesting also what people say about this AI boom and where people are specifically putting in their money, because there was a guest that actually said that the companies that actually make the machines haven't had that big run as, for example, your chip makers. So it's going to be quite interesting to see where investors are more keen to invest their money within that AI space. Of course, US tech being all the rave wasn't so popular though in 2022. They did have a phenomenal run last year, and it is continuing. But with a huge difference in asset values between those tech stocks and SA Inc., is it not maybe time to take profits out of those soaring tech stocks in the US and maybe come back home?
Possibly, and to play into your patriotic sentiments, I think that's exactly what. I don't know if they're necessarily taking profits, maybe a little bit. I mean, if you're up 47% on a stock, that's really not bad. Although, as Wayne McCurry pointed out on Stockwatch last night, over a 2-year period in big tech, you're actually flat. We forget, as you rightly pointed out, 2022 was a terrible year for them. So last year was sensational, but actually takes you back to a starting point. So don't forget that. But Zanati, exactly. So what is interesting and what comes out of the article is that this year, a lot of the local fund managers haven't maxed out their offshore allocations, which does suggest that they are keeping money back because they see value plays on the JSE. And they also talk about if interest rates come down, it's going to, I think it was Mike Flax, who runs a property fund, was saying that investors tend to panic and they search for yield. So hopefully we will be providing those yields. So I think you might see a bit more money flow into local stocks this year, or at least cross fingers that does occur.
Yeah. I mean, talk about coming back home, because a lot of sectors are seen to be undervalued. Do asset managers at this point need to trade with caution and maybe remember that a lot of these stocks are cheap for a reason, or maybe some sectors are unreasonably cheap?
I mean, I think, both of those things are exactly true,
Yeah.
and it's something that asset managers are grappling with. There were decent returns to be had last year.
Yeah.
It wasn't all terrible. I mean, I know the overall index fell 6.6%. Resources stocks really, ex gold, is what dragged us mostly lower. So actually, some people did. Some of the firms, Coronation in particular, did quite well out of banks, and they had a really decent year last year, double-digit returns, sort of up to about 20%. One of the funds is now invested in, I think it's Granite, is invested in ABSA, and it says that even though they were a laggard last year, if interest rates come down this year, they could see ABSA rallying a little bit more than some of the other banks. So, but they are worried about the fiscal situation in South Africa, and that's entirely reasonable. And I guess we're going to get a clearer picture. I get the sense a lot of people are waiting to see what comes out of the budget. What financial commitments is Enoch Godongwana going to make? Will we be able to rein in our government spending, our debt? So I do get the sense that there's a bit of hesitancy, and then you'll have a clearer picture of what the fiscal picture is going to look like come February 21st.
And just quickly, as we wrap up the conversation, as we're talking about some of the risks that exist, fiscal. We also spoke about resources, and you spoke about Coronation. Of course, we know that they divested out of PGMs. Are there still any sectors that fund managers are unsure about on the JSE?
I think PGMs is the big uncertainty. It's really. I mean, one gets a sense that it's a binary call. It's not evident in the article. Which shares are most uncertain. Certainly, people that we've spoken to the last couple of days, in terms of editing stories for the money section, are quite divided over retailers. They're not quite sure. They think they're going to have a decent year. I think PGMs actually. I can see why Coronation's pulled out of them, because I think they are a big call, and no one really knows which way they're going to swing at this point. So I think that's maybe and property. I think property is another call that there's a bit of divided sentiment on that sector.
And really just PGMs, more of the evidence came out after Amplats came out with its production update. Today was down about more than 6%. So it's like we genuinely cannot gauge the bottom. But thank you so much for your insights there, Giulietta. That was Giulietta Talevi on the Business Lunch Desk for the last time as money editor of the Financial Mail.